Hello, guys. Welcome all. I'm your host, none other than Deko Mohammed. I'm pleased to host you this class. So today I want to focus incomplete records. Want to see how to go about the incomplete records and how to account for them. Because in incomplete records, you want to be given the purchase and the figure for sales. So you need to calculate the amount, the figure for sales and purchase, which because they don't keep good records of bookkeeping. They don't keep good records for bookkeeping in accounting. So you need to identify the purchase and the sales. If they were to keep proper records, then we could have been given the value for sales and the purchase. So here in the question, we have been given the cash and the sales, purchase and sales in cash, but we need to find out the credit. So let's first go through the question, then we do it. Also, I'm going to attach this question in the link description. So welcome all. The following information relates to Amani Traders receipt and payment for the year ended at 1st December 2022. So you have the receipt and the payment, cash sales, the Amani receipts. You have the cash purchase, the Amani payment, insurance expense, electricity expense, telephone expense, balance carried down. So we have the trial balance at 1st December 2022, the returns, discount, bad debt, commission, general expenses, motor vehicle, and furniture, then capital. Remember, the first side is debit and the other one is credit. All income have a debit and all expenses have a debit balance and all income have a credit balance. We go on with the question. Then we have been given the, let me scroll downwards. So we have been told the following were the assets and liabilities, 2021 and 2022. So we have the payables, receivable, inventory, telephone expense due, insurance expense prepaid, electricity expenses due. Then we have the additional information, depreciation is charged on motor vehicle and furniture 5% and 10% respectively, carried out to 20,000. Then a total required income statement. So the first thing we need to do in this question, we need to find out, first let's open the, I've already worked out the question. So I'm just going to illustrate the question based on the workings provided. So first start with the heading, Amani Limited income statement. So we start with the sales. Remember sales, we only been given we only had so the figure have been given sales there. We have this cash sales. This is the cash sales that have been given. You can see there we have the cash sales. So we need to find out, this is the cash sales that have been given, but we don't know the credit sales. So, and total sales is equal to the credit sale plus the purchase sales. So we can say here, total sales is equal to the credit sale, the cash sales, which is 75,000. Then in this, we need to add the credit sales, of which we don't have. Now we need to open a control account to get the value for the credit sales. We need to open what we call a debtors control account. So we need to open a debtors control account for us to get the figure for sales, credit sales. And this is the debtors control account. We have the balance brought down. Remember, debtors control account, this is an asset. So if I scroll up where we have in the question, this is what we have in the question. Let me erase this one first, then so that we don't have interferences. So this is the question that where we have the payables 2021, 2022. Remember these payable, we also call them the creditors. As well, we also call them the debtors. So this is the 2021 is the opening balances, 2022 is the credit balance. So we start with the balance brought down. Remember, balance brought down for the debtors should be on the this is the balance brought down. This balance brought down should be on the credits on the debit side. So 12,000 is the balance brought down, and the balance carried down is 18,000. Let me show you guys. So this is the balance carried down we have here, and this is the balance brought down. So we start with the balance brought down on the debit side. This is the balance carried down on the credit side. And then we are having bad debt and discount allowed in the equation. So bad debt will increase, will reduce our debtors. Anything that reduce the debtors, you need to credit. So we credit the bad debts, we also credit the discount allowed. And remember, we had in the question, we had a figure for bank on the debit side. If you go back to the question, we have it here. Remember this receipts. This receipt have been given here. These receipts of 25,000. This is a bank statement. It has been debited. So we need to credit this 25,000. We need to credit this 25,000 in our question. Since it has been debited in a bank statement, then we need to credit in the we need to credit it in the debtors control account. So this the receipt, we need to credit 25,000, and then the balancing figure becomes the credit sale. This credit sale of 58,000 becomes the balancing figure, of which now we are going to add back. We're going to add back our sales by taking that 75 plus 58, we get 133. We get 133. Now, from sales, we less the return inward of 10,000, which was there in the question. Then we get the net sale. From this net sale, you less the cost of sales. Remember, opening inventory was 16,000, and this purchase, we only have the cash purchase. So you need to calculate the credit purchase. And for you to get the credit purchase, you need to open what you call the creditors control account. We need to open what you call the creditors control account. So this is the credit control that I have opened. And remember, if these are creditors, these are liability. The balance brought down will be on the credit side. So we have the balance brought down on the credit side and the balance carried down on the debit side. Since this is remember, this is a liability. So the balance brought down should be on the debit side, which is 10,000, and the balance carried down is 8,000, which is on the credit side. Then we discount receive is going to reduce. So we are going to have the discount receive here, and then the amount given in the question, there was a payment of 30,000. So since it was credited in the bank statement, then you come and debit here in the let me show you that where this 30,000 is coming from. I want to show you this 30,000 where it is coming from. So let's go back to the question. You see where that 30,000 is coming from. You see in the question we have been given the cash, the payment. You see this money payment. So this money payment is what we are going to use it as a payment. So this 30,000 what we are going to use here. That's what we used in the income statement. Sorry, in the creditors control account. So we continue. If we continue with our so guys, that amount we are going to credit it. Since it was credited, we are going to debit it in the we are going to debit it in the creditors control account. So that's why we have bank of 30,000 here. Then the difference become a credit purchase of for 2,000, which we are going to take it in the income statement for 2,000. So we have here for the 2,000 purchase 52 plus 20. So this is the purchase that we had, 20 plus 52, that comes to 72,000. And then we have this return outward, we are going to subtract it. The closing stock, we're also going to subtract it. And this will give us the cost of sales of 45,000. This of cost of sale, we subtract it from the net sale of 123,000. So we are getting the gross profit of 78. So from this gross profit, we are going to add the other income that we have in the equation. So we are going to add all the other income that we had in the equation. So this income includes, we had two of them, the discount received and commission received of 14 and 20. So from this one, you are going to less the expenses that we have. Remember, we had a bad debt, we have the general expenses, discount allowed. Then we had depreciation on motor vehicle, which was 10% of 150 coming to 15,000. The one for motor vehicle was 5% of 100, that's come to 5,000. We have the carriage outward 20,000, telephone 10,200. So if we sum up them, sorry, for these expenses, like telephone and insurance and electricity, we are going to open a working for them. Remember, in the, let me show you something, guys, here. So this is where we had the, remember, balance brought down when we have due account, means this is a accrued expenses. In accrued expenses, these are liabilities. Liabilities, the balance brought down will be on the credit side. That's why our balance brought down of 800 is on the credit side, and the balance carried down of 1,000 is on the debit side. And remember that expenses which has been credited, that expense which has been credited in the bank statement, we are going to debit it here. These expenses we are going to debit 10,000. So, and the difference becomes what we are going to charge in the income statement. While for this insurance, these insurances, it was asset prepaid. So the balance brought down will be on the debit side, and the balance carried down will be on the credit side. And remember, the bank which was there in the credit side will be appearing on the debit side. The difference will go to the income statement, which is 11,700. Lastly, we had the electricity expenses account. So this is electricity expenses account. We had the balance brought down and the balance carried down. It was a accrued liability, so the balance brought down will be on the credit side, and the other will be on the debit side. And this bank of 14,000, the difference will go to the income statement. So we had, that's how we got in the telephone, the insurance, and the electricity. So total expenses is 123,300. But if you compare this with our 112,000 of total income, we are going to have a net loss of 11,300. Guys, that was all about this class for incomplete records, where you need to work out the purchases and the sales and those income that were there. Thank you for watching. I'm your host, none other than CPA Dekom Mohammed. Thank you.